Hello there, this is fairbinaryoptions.com, and it is time to take a look at the Great Britain pound US dollar over the weekend here. This is Saturday, as you can see, the 9th of November 2013, and it is clearly we are having a correction for the Great Britain pound US dollar. This correction looks to start from the highs here, not necessarily from these highs, either from these highs or from these highs. It doesn't really matter, and I am going to show you why it doesn't really matter. Because the move here to the upside, it is being part of a contracting triangle that starts here for an impulsive move 1, 2, 3, and then A, B, C, D, E. If this is like this, then this is the spike to the upside, or it is A, B, C, D, E, and this is the fifth day to the outside. I would rather think that this is the end of the whole move, and we'll use it as our, let's say, beginning for the corrective wave. Well, the corrective wave starts from here, but if you look at the structure of the pattern that we are having in front of us, it has at least a couple of problems. First of all, there is channeling too well for the first leg to the downside, and not only that is channeling too well, but corrections are almost the same. It implies that the first move to the downside is a corrective wave in itself. Well, if it is a corrective wave in itself, then this is not an impulsive move and should be labeled with a 3 waves move. So this should come as a 3 waves move. Then if there is a 3 waves move to the downside for whatever the leg is, then it implies that we are looking either at a contracting triangle for the triangle for the possible fourth wave here, if you are looking at a fourth wave to come, or you are looking at a flat for the first corrective wave of the whole move to the upside from the downside there. So let's just imagine that this is a flat, and this should be wave A of a bigger degree here. So this to be the wave A of a bigger degree. Let's make it red. And now we are looking for a B wave to the upside. Now the B wave to the upside, in order for this to be considered the flat, because the 3 waves move is to the downside here, should retrace minimum, or it is mandatory for the B wave to retrace 61.8% out of the previous move for it to be considered the flat. Now as you can see here, the retracement is to the 61.8 there, but we do have a problem again. The problem is that you need the end of the B wave to be, let's say, beyond the 61.8 and not any particular leg or any particular move to the upside to be over 61.8. There is another problem. In a flat like we are looking now, so we are expecting a flat on the right side here. In a flat like we are looking at, the B wave usually should take the most time to form, so more than the time taken for wave A to form. If you measure the time taken for wave A to form like this, and you apply the time on the right side, you are seeing that actually the B wave, it is not done. Well, if the B wave, because the time element, actually let's make it exactly the same value, because the time element there, it is not completed. We need the B wave to be more complex in structure than wave A usually, and to take more time to form than wave A. As you can see, this is the minimum time for the B wave to form. It is not formed, and it implies the B wave red, it is not done. Well, if the B wave red it is not done, but the price already made a move to the downside, then normally we should head into 61.8 to end above the 61.8, but the 61.8 area comes in 161.15, and there you go, we are in a win-win situation. Basically we're looking for price to go above 161.15 in a time more than the 12th of November at 4 o'clock GMT. 12th of November is going to be Tuesday, so Monday is 11. Tuesday, so more than Tuesday, we should go above 161. So the logical thing to do here, because we're looking for a flat, is to buy calls, of course, at the very beginning of the week, okay, to buy calls either with end of week, but I would rather go with end of day with end of week expiration date or end of day expiration date, but buying calls at this level for price to go 161.14 is a must at the beginning of the week. After that, okay, B wave actually may go 61.8 is mandatory only as the retracement level for the B waves. Otherwise, the 61.8 can be just a target, let's say. So price may go relentlessly go higher in a complex B wave and may even break the highs here. What we are looking for, we're looking for an impulsive move from this moment of time, and by respecting the rules for the impulsive move, because this is a flat, then we should get the let's say the outcome for this move. So buying calls on Monday with end of day expiration date, this is what we recommend. So end of day, not end of week, and by the time price is reaching those highs, we are going to reassess and of course turning the game and looking to buy puts. So buying puts with end of day expiration date on Monday is the logical thing to do. This is our scenario, this is our analysis. Time element is on our side, price is on our side, so that's pretty much it. Monday at the opening, buying not puts, sorry, buying calls, okay? So buying calls with end of day. So here buying calls with end of day expiration date as we're looking for higher prices. Thank you very much for being here. This is fairbinaryoptions.com, and we are looking for higher values in Great Britain pound US dollar starting with Monday, end of day expiration date. Keep in mind all of our analysis and recommendations are possible due to our official sponsor help, Lioneye.